Today I will be presenting a brief audio report on HCL technologies. By the end of this video, you will get to know 5 insights which you did not know earlier on this company. Insight number 1, revenue mix. Coming to the revenue mix, 73.2% of the sales come from IT and business services, 16.9% from engineering and R&D services, 9.8% from products and platforms. Insight number 2, product-wise breakup. The business is concentrated in the following segments. 72% of the business is focused on software services, 17% on infrastructure services, and 11% from business process outsourcing services. Insight number 3, location-wise breakup. The sales of the company is concentrated in the following countries. 64.8% of the sales comes from USA, 27.5% from Europe, and 7.7% from the rest of the world. Insight number 4, ROE and free cash flow. The company has an excellent ROE of more than 20% in the last 5 years. The company has achieved an ROE of 22.22% in the year 2002, which is an excellent sign. An ROE of above 15 indicates that the company is using the shareholders' funds effectively and generating an excellent return on the investment. Also, the company has a steady and increasing free cash flow. This signifies that the company has surplus cash profits generated from the business. These cash profits can be used for internal growth or expansion of the company. Coming to the pledge, the company has zero pledge. This means that in a bear market, there will be no panic selling by both FIs and DIs in this stock. Low debt. The company has nearly zero debt. With a low debt to equity ratio of just 0.06 times, the company is debt free. And this is a great positive sign for the stock. The company has an asset light model and risk of insolvency is also eliminated due to low debt. Insight number 5, market return. With a 5-year positive return of 164.36%, the company has significantly outperformed the Sensex, which just gave a return of 86.54% during the same period. With a P ratio of 21.99 times and a price to sales ratio of 3.26 times, the company is fairly valued. If I were a long-term investor, I would definitely keep the stock in my watchlist radar. For getting more such research insights and in-depth stock analysis, please join our Stocks Made Easy group. Thanking you from team testmystock.com.